Credit repair companies promise to fix your credit fast, but are they really worth your money? In this video, we're breaking down the truth about credit repair services, what they actually do, what they can't do, and whether you're better off fixing your credit yourself. Before we get started, hit like, subscribe, and tap the bell. Because when it comes to your financial future, knowledge isn't just power, it's protection. From quick fixes to long-term strategies, let's cut through the marketing hype and find out what really works. 10. Understanding what credit repair companies actually do. Credit repair companies perform three main services. They dispute negative items on your credit report by sending letters to credit bureaus challenging inaccurate information. They negotiate with creditors to remove or modify negative entries through pay-for-delete agreements. They also provide credit monitoring and educational resources about building better credit habits. The process typically involves reviewing your credit reports, identifying potentially disputable items, and filing disputes on your behalf. They'll send standardized letters to Experian, Equifax, and TransUnion claiming that certain negative marks are inaccurate or unverifiable. When creditors can't verify the information within 30 days, it gets removed from your report. 9. The power of the DIY approach that actually works. You can legally do everything a credit repair company does, and often more effectively. Start by getting free copies of all three credit reports from annualcreditreport.com. Review each report carefully for errors like incorrect personal information, accounts that aren't yours, wrong payment histories, or accounts showing as open when they're closed. File disputes directly with credit bureaus online or by mail. Be specific about what's wrong and provide supporting documentation. For legitimate debts, contact creditors directly to negotiate payment plans or pay-for-delete agreements. Many creditors are willing to work with you, especially if you can pay a lump sum. 8. How to properly review and analyze your credit reports. Focus on building positive credit history by making all payments on time, keeping credit utilization below 30%, and maintaining older accounts. Consider becoming an authorized user on someone else's account with good payment history, or look into secured credit cards if you're rebuilding credit. When reviewing your reports, look for duplicate accounts, incorrect balances, wrong dates, accounts that don't belong to you, and closed accounts showing as open. Each error you find is an opportunity to improve your score through legitimate disputes that cost you nothing but time. 7. Identifying legitimate situations when paid services might be worth it. Credit repair companies can be valuable in specific situations. If you're overwhelmed by complex credit issues, lack time to handle disputes yourself, or need help navigating negotiations with multiple creditors, professional help might justify the cost. Some people benefit from the accountability and structure these services provide. Look for companies that offer transparent pricing, don't make unrealistic promises, and provide educational resources. Legitimate services typically charge between $50 to $100 per month and work on a month-to-month basis. Avoid companies demanding large upfront fees or guaranteeing specific score improvements. 6. Major red flags and scams to avoid at all costs. Many credit repair companies use deceptive marketing tactics. Run from any service that guarantees specific point increases, promises to remove accurate negative information, demands payment before providing services, or suggests you shouldn't contact credit bureaus directly. These are all illegal practices under the Credit Repair Organizations Act. Be wary of companies that create new credit identities, suggest lying on applications, or claim they have special relationships with credit bureaus. No legitimate company has insider connections that give them advantages over what you can do yourself. If something sounds too good to be true, it probably is. 5. The most effective long-term credit building strategies. Focus on strategies that create lasting improvement. Set up automatic payments to ensure you never miss due dates, since payment history accounts for 35% of your credit score. Pay down existing balances to improve your credit utilization ratio, which makes up 30% of your score. Don't close old credit cards, even if you're not using them, as length of credit history matters. Instead, use them occasionally for small purchases and pay them off immediately. Diversify your credit mix by responsibly managing different types of credit like installment loans and revolving credit. 4. Essential credit monitoring tools and techniques. Monitor your credit regularly using free services like Credit Karma or your bank's credit monitoring tools. This helps you catch errors quickly and track your progress over time. Remember that legitimate credit repair takes months or years, not weeks. Set up alerts for any changes to your credit reports and review them monthly rather than just annually. This proactive approach helps you spot identity theft or errors immediately, allowing for faster resolution and less damage to your credit score. 3. Smart debt management strategies for credit improvement. Your money is better spent paying down existing debts, which provides immediate credit score benefits. Focus on high-interest debt first, but also consider the impact on your credit utilization ratios across all accounts. Consider debt consolidation or balance transfers to lower interest rates and simplify payments, but be careful not to run up new balances on cleared cards. Sometimes, paying off smaller balances completely can improve your score faster than making larger payments on big balances. 2. Real cost analysis. DIY these professional services. DIY credit repair costs nothing except your time and effort. Credit repair companies typically charge $300 to $1,200 annually. The results are often identical because both approaches use the same legal processes and consumer protection laws. If you do hire a company, treat it as a convenience service, not a miracle solution. Calculate whether the monthly fees could be better used paying down debt directly, which often provides faster and more substantial credit score improvements than disputing old items. 1. The ultimate truth about credit repair success. The most effective credit repair comes from developing consistent, healthy financial habits, not chasing quick fixes. While it's tempting to look for fast solutions, improving your credit score takes time, discipline, and patience. Start by paying your bills on time every month, which is one of the biggest factors in your credit score. Keep your credit card balances low, ideally under 30% of your limit, and avoid taking on unnecessary debt. Negative marks, like late payments or collections, won't disappear overnight. But if they're accurate, they will eventually fall off your credit report, typically after 7 years. Meanwhile, your positive actions, like on-time payments and low balances, will gradually boost your credit profile. Remember, your credit score reflects long-term patterns, not quick changes. There's no hidden secret or magic formula that professionals use to fix credit. Many credit repair companies simply do what you can do yourself, like disputing errors or negotiating with creditors. Most of what credit repair companies do, you can do yourself, for free. Have you ever tried DIY credit repair or used a paid service? Drop your experience in the comments. It might help someone make a smarter decision. If you found this helpful, like, subscribe, and share it with someone who's trying to rebuild their credit. Until next time, stay informed, stay patient, and take control of your financial story.